thank you very much for your very compelling sort of message on following one's dreams and converting them into realities and keeping that passion. It's very, very important, and it drives a lot of us even at ACCA. The next discussion is around Fintech, which is, I suppose, an acronym for finance and technology, transforming finance. I read the paper. It's an area where I also struggle with and trying to identify, how is this really impacting me? How is it, how am I going to get my head around all these changes? But you guys who are in industry, we're hoping to tap into your knowledge and sort of share with us what's going on and how do we as finance professionals manage technology. It seems that the professional accountants are facing several challenges from Fintech. One is connected with their traditional transactional role, as more and more, from what I hear, cloud-based applications start providing bookkeeping types of services. So, John, your country, New Zealand, is a leading provider of something called Xero, which is an app that a lot of SMEs and other organizations are using, to process their transactions and do their accounting. And then there are a host of other apps which are allowing the processing of receipts and invoices on your telephone. Or telephone? I mean your mobile. Right. So how much of a threat, so my question to all of you is, how much of a threat is this to the transactional nature of the work of accountants in businesses and small practices? So who'd like to start with that question first? John, would you like to start with that question first, sir?
Absolutely, thank you. Well, I think technology itself is absolutely going to change the way we work, and already is. In my experience with Nestle, we are using technology not only to do transactional work, but in fact to take services global. So in fact, technology is enabling the organizations to focus really on value-added activities and to leave the processing for machines, and even in future, I believe, robots. So Fintech is really at the forefront of that evolution to ensure that organizations that we all work for are going to be better servicing the customers and value-added products and services, and obviously enhance the quality of life that we all have as well, long term.
Thanks, John. Kabir, is that your take on how Fintech is intervening in the world of finance?
Yes, I would like to add to it, like as an accountant myself and as a CFO in my past life, we don't look at it as a threat. It's rather an opportunity. It's the accounting standard setters and the regulators that have to come up the curve to deal with these. So if you ask me, while being a microfinance bank, fintechs are helping us form linkages. We are mass bankers after all. We give hundreds and thousands of small loans, right? So this is an opportunity and an opportunity. That's the way we look at it.
Elise, of Person Style UK, in terms of where you see Fintech taking over the transactional type of role of professionals.
Everyone, so good morning, and ladies and gentlemen, thank you for the opportunity. So I think before I start, I would like to have a common definition of what Fintech is.
Please.
I think that's certainly important so that all of us can connect with it. So I think Fintech is primarily startups and companies who are trying to do things which are traditionally reserved for financial services. So if a bank does something in technology, it might be considered Fintech, but they are kind of adopting to the demand and threats in the market. So it's primarily this entire phenomenon of Fintech is reserved for startups and new companies who are trying to do things which are traditionally reserved for banks, financial services, insurance, and other players of the market. I think I agree with our fellow panelists here that it's not a threat; it's more of an opportunity. It's a threat for those who don't want to change, who just want to act like the gatekeeper of yesterday and feeling confident that if they continue operating the way they always have been operating, they will succeed and compete and able to do things in the digital world. Fortunately, this is not the case, and now we see many new companies who are trying to do things new ways, and a lot of organizations like Nestle, IBM, Microsoft of the world, they all are trying to understand the impact of this, and most importantly trying to leverage it so that they can remain competitive and most importantly create new markets. So that was my kind of early take on it.
Ali Safraz from Karandas, would you like to add your views on this? Really, I think the question is really around, okay, well, our accountants going to find themselves increasingly, out of a job through fintech sort of coming into their area of work, especially at that base of the pyramid, the transactional work that a lot of accountants still believe that they have to start with.
Yeah, right. Thank you very much. I think it's both an opportunity and a threat. And I think fintechs, for example, kind of very repetitive, very predictable kind of work, for example, bookkeeping. I would say those kind of jobs would probably be taken away. And fintechs would definitely, with IBM having a Watson and with a lot of digital transactions happening, I think the need for those kind of jobs obviously would become redundant over time. I mean, there are going to be driverless cars in the future. So from that perspective, it's a threat. I think in certain verticals, it would definitely be a threat. I mean, look at the kind of products now being offered, and I think there are some which will be very, in a very near future, will be offered in Pakistan. Things such as digital credit and things such as peer-to-peer lending and crowdfunding, So a lot of these innovations will take away the need for repetitive kind of jobs within the financial industry, and to that extent, I would say they would disrupt and they're a threat. In terms of the opportunities is obviously to leverage technology. I mean, fundamentally, the very first technology that came within the banking sector, which was kind of a threat to the professionals within the financial service industry, was an ATM, right? Automated teller machine. But you can see that you still find tellers in the banks, and you have ATMs as well. So the point is, it is going to be much more disruptive than an ATM was to a teller, a bank teller.
Nadeem Saab from IBM. Again, this whole question around, automation, robotics, artificial intelligence, increasing interventions by these apps which are going to take over the transactional nature of jobs. Your views on that?
I think technology has done disruption long time. It's not a new phenomenon. Look at that. There's no more careers in any scope. Let alone accounting, or the careers are gone. They become jobs. They become tasks, and then bifurcation towards it. So, like everybody says, the transactional business, which is standardized, doing everything repetitively, is going to be it's already taken over by the technology. And this is going to happen more and more into the upper grade. They're going to move up the pyramid, and then the more artificial intelligence more machines are learning, and the more the jobs are taken over. But that is an opportunity for all of us, because end of the day, artificial intelligence still depend upon human interaction, how we learn and how we grow ourselves as well. So that's an opportunity we need to come up with. What's a fintech? I think let me just elaborate what you said. Financial sector already very much automated. You used to be a customer of a branch, now you become a customer of the bank, then you're a customer of anywhere you want to be. The fintech is basically the ideas or the companies who are targeting the customer who are outside the banking sector right now. The banks only do very limited interaction. They keep your account and they give you the money when you want it. How the transaction happen, where you spend it, and how you want to do the transaction, that's where the fintech startups and companies are moving into it. An estimate, there's a $500 billion business outside the banks and happening. That's gonna do it. So what Dr. Saab is doing is a classic example of a fintech. So this is where I believe the opportunity specifically for the accounting professionals, because they understand the transactional business, they understand how the two entities or the two individuals collaborate and they do the transaction, and how I can automate and get the best out of it. I believe that's where the technology helps, that's where the regulation, that's where the environment is conducive.
One of the questions that comes to mind, and I think it's really in the area of finance, is around, you know, the modeling that we do, the financial modeling when we're presented with a fintech app which is going to be used to scale up business. So, for example, Dr. Amjad talked about how his microfinancing business has grown from a handful of borrowers, if you like, to hundreds of thousands. And that's the raison d'etre of fintech, because it talks about large scale sort of customer base. But my question is that, you know, world of finance, it's very difficult to financially model for something which is so huge and scalable. So, you know, for each one of you, my question is, you know, how do financial accountants, and really also whether businessmen generally or leaders generally, how are they managing, the sort of reality of all of this scale of financial modeling? You know, perhaps I could ask Steve first.
Yeah, thank you. The recent example, the recent local example in Pakistan is the launch of branchless banking in 2009 between Telenor and Tamir. So at Tamir, when we were talking about it in 2007, knowing that the country's 86% of the country was unbanked, and you know the model that we had as a microfinance bank was to serve that part of the population, but we were very small. How could we scale? Then we started talking to these telcos. We looked at the M-Pesa model in Kenya, which was a telco-led model. However, the regulator here was much more open to allow banks to get into this business and leverage onto the distribution networks of the telcos. This is how it all started in 2007. Telenor was one of the we spoke to all of them, and Telenor actually in the end agreed, and they acquired 51% controlling share of Tamir. But what did we do? 12,700 bank branches approximately in Pakistan, and 350,000 retailers of telcos in Pakistan. So even if you start comparing the two, it's absurd, right? So if we wanted to reach out to the masses, you know, and to scale the business to an extent, that was the only logical way to go. And the rest is history in a sense. So this is, and if you ask me as the CFO of that organization, how did we manage the scale? The idea was to get granular current account deposits, mass deposits for the bank, and for the telco to cater to the churn by providing financial services to their clients, and it was a win-win for us.
But I'd like to bring in some of the guys from the technology side, because, you know, there is a danger that the developers of a lot of these fintech apps or products are over-optimistic. You know, is there a level of over-optimism, Ali?
Too early there.
Yeah,
too early.
Right.
Go ahead. Go ahead.
So I think, you know, this is a tricky question to answer in terms of, like, you know, whether exists an optimism. Optimism drives market. We need a certain element of optimism to exist. Secondly, you know, again, like any other hype, it attracts attention and newcomers and new opportunities and some charlatans and wannabes as well. So I think this is where, you know, one needs to be savvy and, you know, understand the market. So right now, this kind of, you know, industrial age divide between, you know, I'm a technology guy and he's a business guy, I think that line has blurred. You know, and if a business guy doesn't understand technology, just tell him thank you very much, you know. And similarly, if a technology guy doesn't understand business, you know, I don't see any future for them. I think this is more about going forward, machines plus minds, augmented intelligence, you know, treating machines as our friends and treating them as part of our delivery framework. So I think what we've seen in industrial age was kind of an extension of our muscles. What this age and this time is giving us an extension of our brain. So I think that's why it's creating kind of a disruption which is unheard of, you know, giving us a situation where we're calling it uncertain, ambiguous, volatile environment. But these are new normals, you know, and new companies which are thriving are actually comfortable with these new normals. So a lot of Fortune 500 companies, you know, top 10 lists, they didn't exist 10 years ago or 20 years ago, and this churn is going to continue happening. You know, I think you need to understand and become comfortable with, and how you can become comfortable with it. Talking about it, educating next generation in this area. And what I see in Pakistan, I think, you know, there exists a massive gap in terms of, you know, upskilling existing professionals, be, working with universities and academics to understand, gone are days, teaching bishops and Murphys of the world. The curriculum has moved on. We need to focus on new things so that people can, do new things new ways. That would be my.
I think I would just like to add to it. Today, this optimism is driven by two factors. One is the opportunity scale is really huge. Dr. Shab has right now 10 million customers, and he wants to reach another 18 million in Pakistan. So I think that's where he wants technology can reach. So technology that can provide you get reach. So opportunity landscape is really huge. Then what's a turnaround time to have an idea converted into actually the app or in things? That's where the power of the cloud comes in. The cloud is not certainly somebody else's computer. It gives you a lot of analytics, it gives you the intelligence, it gives you the platform. So you can turn around your application time or your idea conversion into an application is quite fast. They bring the agility, and that you can not only improve, but you can bring the new ideas on. So these two things, let's say if two kids from the university sitting in a Starbucks or Gloria Jeans have an idea, and they don't have to buy anything. So they have a computing power of Fortune 500 on their fingertips. From IBM, it's 30 days free, but they can pay for a fraction of the cost, and they can convert the idea into the application and run and test it. These two things are driving that ambition, and that's why I think the opportunity for everybody in this audience is as well. How do you convert and bring your idea fast in the market, and then employ for that? And one kid is driving it. The idea how my car tell me one time of maintenance is required. When you go to shop, it automatically pays for its maintenance as well. No credit card charge. So think about it. That's a financial transaction.
So coming back to the numbers again, in the sense that, John, if I could bring you into this as well. So often the CFO, where there's a fintech opportunity presents itself, maybe on the, let's stick to the revenue generating side, the CFO is also involved in moderating and getting a sense check on the financials around that. So what revenue streams it's going to generate in the future. So when you go into a boardroom, with that sort of huge assumptions around a business model, around a fintech business model, what are the risks which you think that CFOs and the finance function could face? In terms of, again, when we talk about a VUCA world, you model for something, and suddenly there's a new product out, and your scale, which you were predicting of hundreds of millions, is suddenly being taken over by another product. So where does the CFO, so how does he manage that volatility?
Well, I think, first of all, the biggest risk is to be closed-minded on fintech. It's easy in a large company to think that you're successful and we don't need to look at those things. So first and foremost is to really accept that that is the VUCA world. It is changing, and you've got to be part of it. You've got to actually be at the forefront of it. And as accountants, as finance professionals, and I agree with you, the lines are blurring between business and finance, and in our industry, the future of finance people is to be business people, is to understand the business model and how can you bring value to that business model. And it may mean that you need to go out into the farms, you may need to go and sell with a salesperson, you may need to go and work at a factory for some time, and to understand how the business works. Because our role is no longer doing the asset equals liabilities and proprietorship balance sheet. It is really about how we can add value. The biggest challenge we have is, I think, sometimes taking a chance and making a commitment on fintech in the organization where you have good strategic partners outside of your organization also supporting a clear vision as to what you want to achieve. We've done something similar for ourselves in our industry, in our what we call our milk shed, where we have digitized our payments. And that required a key strategic partner and also a commitment from our business. And at the end of the day, it's not just about numbers. It's about where does this take your business model? What value add can you bring long-term through implementing fintech in the organization?
Let me bring in Karandaz as well, Ali, and open up the question a bit more. Kabir mentioned regulation. Our economy, our orthodox business models are accustomed to, a set of a regulatory framework in Pakistan, which is quite orthodox. Yep. So you have the SECP, you have the state bank. A lot of the regulatory framework is based upon, the pre-21st century business models. And now we're trying to adopt these fintech products. We're trying to scale up businesses through them. So what is your analysis of how quickly regulation has to also adapt and modernize? And is that happening? And what can we, as an accountancy body, do, working in collaboration with the fintech industry, do in sort of teasing out the main areas where, regulation is really causing harm to business growth in fintech?
Right, thank you very much. It's a very crucial, critical question, but just touching upon a couple of points before. So John said about valuations. I think one area where the finance professionals and the accounting industry can actually help is how do you value such a business, right? Right now it's driven about number of users. If I can design a financial app and I can sign up 1 million people and they start using it, I can probably sell it for, I don't know, $10 to $100 million. WhatsApp is not earning anything. It was valued at billions of dollars, right? So one area where financial professionals can help and accounting professionals can help is how to value those businesses, how to value a startup. How do you value a fintech startup? And I think there's a dearth in Pakistan of those kind of professionals. The second point that I would like to raise is that that's regarding both about the optimism, as a lot of fintech companies are optimistic. Apart from the 2 points that you have mentioned, and very relevant, is capex going down for them, and it's actually the idea. There's another reason is that all the plumbing and all the infrastructure, the biometrically verified phones, all of these penetration of smartphones is increasing. A youthful population, which is more kind of tech savvy, uses smartphones. I think those are also some of the drivers that they see there is a customer base. On the regulatory side, you're absolutely right. We recently we commissioned a report looking at the regulatory framework. So if a new fintech comes up with a brilliant idea, they want to try it out and test in the market. Now they go to the regulator, and the regulator says, well, you need to get a license, or you need to get registered, and you need X amount of capital, and they can't do anything. On the other hand, if they go to a financial institution like a bank, they are very scared and afraid that the bank will eat them up, take their idea, and they will be cut out of the whole thing, and they won't get enough value out of that idea. And that's definitely a barrier. And one of the things, we are also working with the industry in developing regulations for startups. Well, some of the things that can be tried is having a sandbox approach that's used in the UK, for example. The Financial Conduct Authority has a sandbox approach where a fintech can come in and they want to test their business model or their application. So they are provided that kind of facility without huge costs and also without any liabilities. So I think we need to move in that direction. I think the regulator, interestingly, Kabir mentioned the branchless banking regulations. They actually came out in 2007, and the branchless banks actually came much later. So to that extent, I would say the regulator was quite advanced. But in this very fast changing area, fintech space, we need regulations. We are working, actually, Karan Das is working with industry on developing regulations under the existing laws and help them and drive that discussion. And I think this professional body should definitely be a part of it.
So for young accountants out there, where they may be working for an organization that's sort of experimenting with developing fintechs, increasing more and more, a lot of our young people are out there. So we saw an example recently of the Punjab government intervening in the business of Uber, and Kareem saying, well, you haven't met this, therefore, the first sort of news was that they have to close down operations. So when accountants who are not really, we normally look at the regulations around corporates and businesses and taxation, how do we sort of ensure that when we are developing new apps, that what is your advice to accountants, especially with Kabir and John, around how they can, if you like, factor in these unknown or regulations into some of the newer work they're doing? What do they have to be mindful of that they don't trip up with, old regulations fitting new business models? It's a tricky one, but I know.
No, I'll jump in later.
Okay.
Go ahead.
Go ahead.
Look, the regulatory environment across the world cannot keep up with the technology or offering in a different business disruptions. So this is, we have seen an example. If you look at the Uber's example, they face a lot of regulatory issues in Europe. The taxi guys got on strike, and the regulatory issues, and they find some clause to shut it down. So this is, I think, this is very serious. When you come to the financial, I think, or I can be loud enough. I think that's where the sensitivity comes in. The data of the customer becomes very sensitive. How the financial transaction is happening between two entities become sensitive. So regulator is receptive to ideas, but how they adopt and publish a policy, I think that is something which is taking a lot of time. But there's a way around towards it today. If you look at today's, all the fintech startups are basically working with some license holder authority, whether this is a Ubank or other banks as well. Rather than fighting the financial sector, banking or insurance should be afraid of these startups and the rising of things. I think there's a collaboration opportunities are huge, where you can have the existing regulatory environment, and then you can always go out to the out of the your right now circle, and you can bring those people under your umbrella, which are now right now in your transaction process.
Could be. We had a Chinese council member here over the last 2 days, and I was talking to her about some of the, the smartphone apps that they use in China. They don't have Google, they don't have Facebook, they don't have YouTube. They had an app she was using called Weibo. Now, but I was amazed that Weibo was very similar to WhatsApp, but it had, when she opened it up, it had an icon for financial services. Yep. So, and I was amazed. I said, does that mean that in the future somehow WhatsApp could put in another icon on their interface for us to start sort of transacting, in money? And can WhatsApp then apply for a banking license here and start up that? Is that what the potential is?
Yeah. So I'll take both your questions one by one. And before that, I would want to clarify that usually we use fintech and small startups interchangeably. This is a mistake that we often make. Like, for instance, as we speak, Ubank is in the process of converting all its core bank accounts into mobile wallets. I'm not collaborating with any third party. We're doing it in-house. So financial technologies, and the Tamir Bank Telenor example is there as well. So first of all, this distinction needs to be drawn. So you could be a small startup offering fintech and work on a balance sheet of a bank or an FMCG, or an entity could do it itself, right? So usually the example is that, the larger commercial banks are like old fossils and not willing to change. That's why you need to work with a smaller third party and scale. So coming to your next question, regarding the accountants, when you venture into new areas, that are new to the environment, what do you need to do? Talking about in the Pakistani context, and as Ali also endorsed, we have high respect for the central bank, because we are the only bank-led branchless banking model in the world. So this credit we have to give to our banking regulator. Yes, they're evolving, the regulation is evolving, and the pace of change is very fast. The other thing is, in case of Uber or Careem, we have very clear tax laws and all, but it's human when you start. I would not put all of it on regulation or lack of regulation or clarity. I'm sure these companies have been incorporated in Pakistan under the ordinance. So there is more to it than what the press is telling us, I would say. Lastly, what you just mentioned regarding the app that you mentioned, that app has a mobile wallet attached to it. So if you were to do it in Kenya, you could do it today. If you want to do it in Pakistan, you need to have a banking license. So banks like us or Tamir or say other Finca, any bank are very well suited to do it on an app on a mobile phone. And in fact, work has already started.
Yes, please.
Not sure which one is working. Hello. So, okay. So quickly, two things there. I think your question was related to WhatsApp. Can WhatsApp get into?
Well, yes.
So I think it's already happening. I think we need to understand there are three areas which are revolutionizing the world right now: speech, image, and machine-to-machine communication. So, for example, I'm in a retail world, and my refrigerator wants new eggs. Doesn't need
your fridge wants new eggs.
New eggs, they need to be replenished. Or I need to replace, or I need a dozen new eggs. So it doesn't need my intervention as a human. So exactly. So machine needs to know when to order those new eggs, and for machine to do that, we need a new type of financial model, and that model is going to be provided by smart contracts. From micropayments, from machine-to-machine communications. So this is where the internet of value and internet of transactions separate themselves, because we're now getting more into a world where machines are more autonomous. We need self-executing contracts, no intermediaries. We're talking about Uber earlier on. I don't want Uber there tomorrow. If it's about disrupting disruptors, I want to go directly to that driver who's driving the car and get the service from him. It's like if I've got a spare capacity in my car. I'm driving to Islamabad, for example, then I can take 3-4 people with me. And there are many ways, this sharing economy is going to even disrupt the existing people who we consider as disruptors of the market.
So there's a lot of potential for disruption, and we shouldn't be surprised, especially with this machine-to-machine.
I think it's new normal, get comfortable with it. It's absolutely new normal. Anybody who makes a big deal out of it, I think, we need to help them understand this phenomenon.
So my last question to everybody is around, this notion of big data. Every time we talk about technology, every time we talk about fintech, we also talk about big data as well. So big data is probably connected with also this concept of blockchain, because blockchain, if I use an accountant's term, a sort of a continuous ledger. So you've got a ledger which has a lot of transactions posted to it, and everybody can access it. So in my mind, there's all sort of security concerns around that, and there's lots of data in there which is being updated and modified all at the same time. So so the connection between blockchain and the connection between big data is, as accountants, we're very accustomed to handling defined ledgers. So there's a cash ledger, a nominal ledger. We know the various expense accounts. We know what's being posted in them. It gives us a sense of confidence that we can draw a line, and I use an old expression, end up with a trial balance. We know exactly where the data originated from, and we're in command of that data. But with big data, a lot of the information is generated by consumers, and there's a lot of emphasis now on accountants to manage and own that big data, and it's becoming very cumbersome. So John, within a company like Nestle, a lot of data being generated on your consumers, on your buyers, your vendors, etc. Start with you. How does the qualified accountant, the professional accountant, do we own that big data, or does somebody else own it? Who owns it and who manages big data? Or does everybody own it?
Well, I can speak on how we manage our data. Is obviously we have a lot of information about our distributors, our customers, even some of our consumers, if we have a CRM model. And obviously we have to take, first of all, privacy is very important around big data. It's very important that we treat that with the privacy that it deserves. And obviously we have the responsibility as a corporate to ensure that we treat that with that respect. Obviously, it's ensuring that big data is used for the purposes upon which it's been acquired. It's not abused, and it doesn't get into, obviously, the hands that it's not intended to get into the hands. So yes, we do have a corporate responsibility to ensure that we protect big data, that we use it for its purpose, and otherwise you lose the trust. You lose the trust upon which you acquire and are going to use that big data. And I think this is a big part of a corporate responsibility that we need to take very seriously. and it will become a big part of our world. No longer will it be that companies have accounting systems that are contained within their general ledger and their payables and receivables and balance sheet. It will be more of a cloud computing world. Access to data is out there already, and I think this is a very big part of what we need to be protecting and ensuring it's used properly at a corporate level.
Thanks, John. Some of the other technology people on the panel, in terms of, especially, where there are all sorts of fears around the custody over data which is stored in cloud, especially,
Of course.
and therefore, where's the stewardship? I mean, we love the term stewardship, us accountants, but as soon as it's in a cloud, well, who are the stewards of that data?
That's true. I think there's a three questions which I'll take a few minutes towards it. Let me tell you about the data and then the big data. Data is next oil. That's the next natural resources. A lot of people ask me question why Facebook and WhatsApp is free or Google. Most of this is the data we provide them. We provide them what we eat, what we sleep, what we buy, what we, where we're going, where we're staying, who's our friends. All sort of the data information which they're collecting that's where the oil comes in. That's the data. The data is next big resource. So when the data become from my name, my ID card, my date of birth, there's a structured data. There's a lot of unstructured data. It's my voice, it's my fingerprint I put on an iPhone, it's the steps I take every day because my phone counts it. There's a lot of unstructured data as well. That whole set of these things become big data.
And there's also, if I could just intervene, there's also the data now generated by your fridge.
Absolutely.
Because your fridge is in contact with another machine.
Absolutely.
And I don't know that. I don't know my fridge is ordering.
Your cars are generating a data. Your cell phone is generating a data about you. You are basically right now sitting here generating a lot of data points. So these data points, specifically IoT, give you an example. Whether company is owned by IBM, it's a 1 billion points around the world we collect the weather data, and that is a really big, huge data. So big data or big data set is basically next opportunity for our accounting, financial, or accounting professionals. How do you derive the value out of that data, and how you can develop a new product line, more customized customer experience, and how you can add value to your own profession and become the disruptive accountant. I think that's where the opportunity exists.
Ali, very quickly, if I could just intervene there very quickly, because we're running out.
Here. I think number one, data is definitely not the new oil, because we haven't done really well with the oil. Secondly, I think marketers, as usual, they come up with terms which have absolutely no linkage with the real world. So, for example, big data is worst ever category name identified for the phenomenon. Data is just at par now with other resources like capital, labor. Just start treating it like that type of resource. And there's a nice article on HBR, which says, please don't treat data as an oil, because we've not done environmentally really well when it comes to data and its ramifications. Secondly, I think, on the regulators...
That means you're saying don't treat data as a commodity which you can buy and sell. Yep. Is that what you're saying?
Exactly. It's as par with, the way you treat labor, the way you treat capital. It's just another resource into the process.
But an organization that's sitting on a lot of data, they would want to capitalize on it.
Yeah, absolutely.
They would want to
you capitalize on labor. You need ROI on your resources. You need ROI on your capital deployed. Similarly, you need return, or you need to monetize your data. And there are established practices and strategies available out there, which one can.
Sorry, because this is getting interesting. Because blockchain would mean that everybody has access to it.
No, that's what I'm going to explain it to you. Yes, the blockchain is a technology everybody's discussing and talking about, and majority I meet, they don't know what blockchain is. The blockchain is going to do to the business what internet did to the business. If I would say there was a chat application in 1999 named as ICQ, which people never seen in a value. They never thought a chat application would be sold for $19 billion. And the Chinese application you just talked about is valued at $110 billion. Reason is they have the profiling of the users, they have the data availability to them. And that's where the data is not sold, data is extracted, the value out of it. The blockchain is a shared ledger with the rules defined. Who can see what and who can do what with that data. And the data, since the ledger is distributed among more than one, or more than two, or more than three ledgers, and since the data is immutable, cannot be reversed, Every time the authenticity of the data is go for check, it checks the complete cycle and see the whole data is, the whole ledger is synchronized with the same record. So that's where the blockchain is. The blockchain is going to do what internet has done to the business.
So there are sufficient checks and balances
Absolutely.
and access controls over
That's the beauty of the blockchain.
Okay.
Yes.
So I'm sorry to intervene. We're really over time, so I'm going to ask Hamad to come back on stage. Can I have an appreciation for the panel? Yes. I know questions, if I could ask the audience to keep your questions for over lunch where you can network with the panelists. Okay? Are you willing to do that? Thank you so much. And I know we've got some questions online and we'll take those as well. So I'm just going to end here, hand back over to Hamad. Thank you all very much. Thank you, Bruce.
Thank you very much, Arif.